I think we're due for a pullback. But when that is quite hard to time, I think. Right now, there seems to be a lot of buying of risk assets. I'm not sure, I really don't know. Like, I think that Bitcoin now is traded like any other macro asset, $2 trillion. It's big enough. It's not like in its own little bubble in its own cycle now, and we are orbiting macro. So if that turns, Bitcoin will turn as well. And of course, when the macro goes up or down, Bitcoin's, very accelerated. It's like that on steroids. So, but long term over the next 4-8 years, of course, it's going to continue to outperform every single asset class on the planet.
In his latest interview, Willy spoke about the dynamics of Bitcoin's market cycles, focusing on the role of futures and paper bets. During the last cycle, the introduction of Bitcoin futures on exchanges like CME led to significant trading of paper Bitcoin, with investors using derivatives to hedge or exit positions instead of selling actual Bitcoins. This caused a surge in paper bets, especially when Bitcoin reached $70,000. The market eventually tipped as the crypto ecosystem faced a series of collapses, including the FTX crash, leading to a bear market. However, after FTX's collapse in 2022, paper positions evaporated, and many Bitcoins were bought off exchanges, signaling the beginning of a bull market in January 2023. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Willy.
Well, there was an interesting cycle, the last cycle. We had a lot of uptake on the futures exchanges. Obviously, the CME came in on the tail end of 2017, and over that time, we had a development in the futures market, effectively trading paper bets on Bitcoin. And the last cycle was very dominated by paper. And so this is the thing, is that when I do my work, which is looking at what's happening with the transactions on the blockchain, where you can kind of get a good read of what's happening with investors with spot, you don't get the full picture of what's happening on the derivative side of things. And whilst there was a lot of buying on the underlying spot Bitcoin, there was a lot of bets coming in on the tail end of the bull market. I think we touched 70,000 for a second time. And then the amount of paper bets on Bitcoins went through the roof. So you don't, in that phase of the market, you don't actually need to sell your Bitcoins, right? If you want to exit, if you're like an investor, a sophisticated investor, you wouldn't sell your Bitcoins. You would just hedge them out and sell shorts on your Bitcoins. And it turned out that you would collect something around 20% annualized yield by netting out to cash. And that's actually what happened. And that tipped the market. And then, of course, the weakness in the underlying crypto side of things, like Terra blowing up, and then a cascade of liquidations and like earn products blowing up, and eventually FTX blowing up. We had a very, very pronounced bear market as a lot of coins got dumped. And so it turned out the bottom of the bear market of 2022 was just after the FTX collapse, and that was when all the paper evaporated. They stopped their shorts, and a lot of Bitcoins got scooped up off of the exchanges. Some of that was probably custody risk, but I think a lot of it was bought up, and that marked effectively the start of January 2023 bull market. And the interesting thing about this cycle right now is, of course, spot is back in, right? We've had the ETFs come in finally, and that has allowed the institutional type and also high net worth types to buy the ETF through traditional, TradFi exchanges. And so where previously, if you wanted exposure to Bitcoin, there was no real you had to do offshore exchanges, really sort of grey water, sort of regulated markets. It's sort of regulated, but now you've got, so you could only get long exposure through the CME. Now with the spot, that's brought a lot of, spot dominance back into the game, and that's much more bullish for Bitcoin. If you think about bets on Bitcoin, that's effectively debasing the currency, right? Because if I am, wanting to buy Bitcoin, and I have to buy spot like before futures, then someone very, very rare in the world who has Bitcoin has to sell it to me, and they've got to be convinced to sell it to me. But with the invention of futures, someone can say, "I'll take that bet with you," and they can sell me that exposure. So there's quite a bearish pressure. It's a debasement on the 21 million finite supply. And so with the spot dominance, it's much more bullish. And, so far this cycle has been, I still consider we're in a reaccumulation cycle. People think we're bullish, but actually underlying it in the phase we're in, it's kind of that, if you remember, we chopped around for a long, long time around 10,000 in the last cycle before things went ballistic. We're in that phase of the market, but it's skewed bullish because of the ETF and MicroStrategy. So that's where we are now. And of course, a lot of the regulatory risk around the SEC is evaporated effectively this week with Gensler leaving office. And of course, we've got our first president that's about to be inaugurated effectively today. That is pro Bitcoin and crypto, but Bitcoin, that's important. So yeah, and a lot of talk around the strategic reserve.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.